Amnish Agarwal, who's from Prabhudas Leeladhar, as well as you have Nuresh and Kunal also joining us to talk about the markets on the charts. And Amnish, let me come first to you and let me ask you about M&M, given the fact that that is among the top losers on the Nifty today. They've come out with their bookings, but the street is not too enthused with it.
Hi, Nisha. You see, one of the main factors is that M&M is one of the few stocks. If you look at the entire pack in auto, which has not seen much correction from the peak, even in terms of numbers, whether these are quarterly results or the monthly numbers, I think this is one company which has been bucking the trend. And the kind of market which we are operating in now, it's more like that investors are booking profit wherever there is still, like I would say, the stocks have not gone down or there is still scope. So I would say that I would not read much into, you can say, this 1 or 2 day kind of a phenomena. If you look at, say, last 6 or 12 months, I think in the entire auto pack, I think M&M is one of the best outperformers. And I think that situation sustains, and the overall, in the medium term, the outlook on M&M that remains to be quite good, barring the fact that we need to see how the tractor demand goes for next year, because we are now towards the fag end of the current year. So I will not read too much into, you can say, this 1 day correction due to these bookings.
Welcome back. You're watching Closing Trades right here on ET now, and as you can see, we are around the flat line when you talk about the benchmark indices. Select counters that are actually moving in trade today. Take a look at what Samvardhana Motherson is doing, because that one is declining in trade because analysts are flagging off near-term demand concerns for that one. The other thing, another one being Borosil Renewables, that one is has posted wider than expected loss in the quarter gone by. So the counter is under pressure in trade today. Zydus Life, on the other hand, the plant has gone ahead and cleared regulatory review, so that's the reason why the stock is now the day's highest point. But talking about the pharma space in particular, Amnish, I wanted to get your view on which side of the pharma space should one look at, because you also have generic, you have biosimilars, you also have CDMO players.
You see, pharma in general has been doing well, and if you look at, say, past 3 to 6 months, I think all the three segments, you would have seen companies in generics, biosimilars, as well as in the CDMO space doing well. In fact, last quarter numbers of DBs were also quite interesting after many quarters. So I think if you look at the broader market, pharma today is outperforming and seems to be better placed than most of the other segments. There seems to be some uncertainty that if US increases the import duties on Indian pharmaceutical companies, but I think that should also not be of any worry at all, because US is a big importer, and if, for example, if they don't import from India, they go to China or any other country, it is not going to be any beneficial to that country in particular. So I think pharma in general should do well, and particularly at this point of time, I think very rarely you have seen all the three segments moving in tandem. So I think all the three are doing well. So and I think the trend should continue. The way the markets are poised, I think pharma seems to be quite well poised at this point of time.
The key gainer today has definitely been Glenmark, so look out for what that stock has done, because that's seen a massive recovery. In fact, we spoke with Mr. V.S. Money from Glenmark earlier today, firstly talking about the US FDA observations, and 5 of them which have actually come by for the Indore plant, wherein he stated the nature of these observations, and he also talked about the margin guidance that they foresee now going forward.
To a sale in the current year about 13,500. We already done about 10,000 plus, and Q4 is normally good, so we should meet our sales guidances. Besides, as far as our EBITDA goes, we are at about 18%, but we did have some currency losses in the current quarter, which we indicated about 71 crores. So taking that, we would be closer to 19. I think we do expect that we should be close to the 19% in the current year. And also, we had given even during earlier our investor conference, etc. We said we'll improve by a percentage half every year. That should happen in that sense. As far as the gross margin goes, we have consistently been at about 67 to 68. I think going forward, it should be the same. And maybe with some good launches, it could slightly improve as well. And also other guidances that we had given in terms of our R&D capex, I think we are very much all within what we had guided. So we are pretty close to the guidances that we have given.
All right, so that's the take coming in from Glenmark Pharma's management. And if you look at the screen, then that's one of the sectors that is in the positive territory in today's trading session. That is your Nifty Pharma Index. And talking about Pharma Index, Naresh, let me come to you and get your views on the charts for the Pharma Index. Seeing healthy moves today. In fact, off late also, you had Pharma Index actually seeing very good resilience.
So almost the same bottom in the last 2 weeks, holding on to the bottom, and selectively stocks have started showing resilience in the pharma pack. So whether it's a Cipla or a Sun Pharma, even DV's Lab, we've not seen follow-up sell-offs. We've seen more on the mid-cap side, the sell-offs in the pharma space. So finally looks like acting as a defensive, and there could be opportunities going forward. Once the trend changes, we could actually see some breakout moves in pharma names. As of now, we are seeing consolidations and very tight range-bound moves in many of them.
I just want to mark a couple of the top earnings downgrades pretty much across the board that one has seen. Of course, some of them are from within the metals pack. But let's look at consumption, for instance. Trent and most EPS estimates or the reworked EPS estimates on an FY26 basis are now slashed lower by about almost 5 to 6% for Trent. The other one, of course, is ABFRL as well, which came by with its earnings, while the net loss has now narrowed to about 48 crore rupees versus a comparable of 108 on a year-on-year basis. The weak consumer sentiment clearly continues, and that's something that you could tell from the management commentary. And so does the premiumization theme as well. Amnish, what's the best way now after the recent correction in some of these, consumption stocks, and I'm just painting a very broad picture here, to try and take advantage of the premiumization trend? And more importantly, I think the bigger question is whether the premiumization theory now is still going to make you money in the market.
See, in the last, say, 6 odd months, many of the consumption stocks of the segment, they have suffered because of not only the consumer down trading, but also because of the low volumes led by high inflation. Now, I think as we stand today, I think the sector is very beautifully poised because you have seen many of these stocks led by somewhere between 20% to even 40-50% from the peaks. So that is one. Secondly, the recent announcement in the budget which has reduced the taxes. So effectively, people are going to get more money in their hands. Now, the question is, where will that money go? And my sense is that as has been happening over the past few years, I expect that a bigger chunk, for example, if someone gets a benefit of, say, in the bracket, say, of anywhere between, say, 40-50,000 to 1,20,000 rupees kind of a pack, then large majority of that money is going to go in the discretionary consumption. So the entire discretionary consumption pack, whether it is tourism, whether it is apparel and footwear, whether these are some of the, you can say, these are food delivery or quick commerce companies, or you can say some other segments in consumption, QSRs are there. So I think these are the segments which should see a natural uptick in their growth and volumes as we go along. It might not happen in Q4. My sense is that the actual implementation of the tax laws that will start happening on 1st of April. And I think within a quarter of that, I think those months of, say, June, July, they are very critical because by that time there will be clarity on monsoons also, which will sustain demand from the, you can say, rural or the small town side. And if the benefit of the reduced taxes also combined with that, I think 2Q onwards, we should see very smart improvement in the consumption demand. And in consumption also, my sense is that the discretionary consumption should do better than staples over the coming 6 to 12 months at least.
That's where most of the consensus lies, that most likely it is going to be the consumer discretionary end of the market that will actually perform well on back of the booster coming in when you talk about in the budget as well as with the policy. So on that note, thank you so much, Amnish, for joining us on the show.
If you like this video, then like, share and subscribe to ET Now.